Didn't want to let me close it out.
Yes, so we are out here delivering. My wife's delivered yesterday evening, and then yesterday morning at the same. I didn't go with her yesterday morning at 3 a.m. to like 7. She delivered again this evening around, or yesterday evening around like 5 to 8 down in Hillsboro, Texas. And we're doing all this, you know, basically because of tariffs. Tariffs are killing our ability to make any profit in trucking, in our trucking company. So, you know, like everybody else, we are struggling. So what I'd like to say is that we're doing this today. We've created a business that we've been running for 11 years. We've been in the trucking for 11 years. We've had our business for 9, I'm sorry. But we've been 1099 the entire time. We're doing this even to my strange children, to my grandchildren that don't yet know me. I'm doing this right here, right now. I have portfolios set up to be leveraged against the economy, that when this all takes place, we will rise and we won't leave anyone behind, not like our past generations have done to us.
Three, 6, 2, 4. Looks like it's the 4th house on the left. Good morning.
I always feel like about to rob the joint when we pull up these houses. As I was saying, as most of our forefathers have done. They have, especially minorities in America, they have definitely not taught us how to prepare for what's coming. These tariffs are something that has always been foreseen. The correction has always been foreseen. It didn't matter who was in the position, whether it was going to happen lightly or if it was going to happen, drastically, like it's about to happen now. As you see what's happening in the market, already these last 3 days, $12 trillion of market value has been crazily mixed up within our market. So be prepared.
We have 42 stops this morning. We are going to stop Senate right now. So let's take a look right here. No way to contain the packages, that's for sure. Especially with as big as some of these boxes are. It's 3542. Looks like it's gonna be on the right. 1, 2, 3, 4, 6 house on the right. 1, 2, 3, 5. Can't really see this color house. 6. Right here? Yep, that's it.
People need to put your lights on outside. If you're expecting packages, like, have your lights on. It's so dark. So as I was saying, you need to prepare yourselves. The middle class is getting ready to become poor. The upper middle class is getting ready to become mega wealthy. It's just what it is. There's going to be a great divide coming up very soon, very quickly. A lot of people, 2008 is not going to have anything on what's about to happen. I don't know when exactly it's going to happen. It seems like it's going to happen faster than everyone thinks. But all I can say is, if you're not managing your own portfolio, if you don't have diversified investments, and not just portfolios, but in property, if you don't have a small business, you're getting ready to become very poor.
Next one is 10414. So as soon as we take this right here, it's going to be a second house on the left. Maybe one with the yellow checkers. Right there.
I can't speak too much around my wife because she likes to chime in a lot, and we're on 2 different educational levels. So a lot of times what she kind of says isn't really where I'm going with my topic. and she kind of goes in another route. So that's why I'm not talking around her, because if I do, she'll start going. You know, she's very passionate as well, but she's still learning. She's in the infancy. She's not ever understood anything about finances or politics, and so being with me for the last since we've been married, 2014. This has been an eye-opening experience for her. She's just been a hard worker, put your head down, you know, work, make money, build up credit card debt, build up all this type of debt, not understanding that that's the system, that's the rat race. That's what they want you to do. They want you to live beyond your means. Let me give you an example. When I was overseas, I was making about $12,500 a month, about $12,500 a month, and so at that salary rate, I was going to buy a house, and my mortgage broker wanted me, when I obtained one, they wanted me to buy a house around $500,000, and I was like, absolutely not. I want to buy a house that's around $100,000, if not $50,000. I was like, I want to be able to work at McDonald's and afford my home. I don't want to have to find a job, you know, in America for $500,000, a $500,000 home. So in that mindset, I've always sought to live below the means.
Next one is 3808. And it looks like as we turn right, it's right on the corner. It's right there at the corner. Trying to take me to the back.
We didn't have to turn, right?
Yeah, because you got to go down this way next for the next stop anyways.
Okay, you're gonna be hiking through some stuff. I don't even know. Weird. So it's a very good time for me to just jump on here live and start talking about what's about to happen. I mean, as I stated, in the last 3 days, the last 3 trading days, from Friday, Monday to Tuesday to, I believe it's day Wednesday. I think today is Wednesday. I don't even know anymore. $12 trillion market value has escaped large S&P 500 companies, Dow tech companies, big tech companies, and 12 trillion is not anything. I mean, these companies, they have leverage within the quadrillions. If you look at derivative exposure through big banks, Bank of America, JP Morgan Chase, you look at institutions like BlackRock, Vanguard, their derivative exposure and their short interests, their short coverage is so astronomical, out of this world, that people are just, whenever these companies get hit, it's going to be crazy. And if you don't have some of your money in the right place, you're going to find yourself very, very without, very much without. So I'm appealing to people, you know, start talking to people like me, start getting together, like, share, subscribe. Let's have a conversation. Let's have dialogue in the comments. Send us messages. If you're in trucking, definitely like, share, subscribe, follow us. If you have a trucking account, if trucking social media account, let us know. We'll like, share, and subscribe to you. We'll comment down below for you. Ask Bella Star Transport. Things are getting ready to just be extremely crazy. Listening to the news right now, you're really not doing yourself any justice. You better be finding out and reading different books on how to adjust your finances and to come out on top, because there's an opportunity for you to become wealthy beyond your imagination. There's an opportunity for you to take advantage of the situation. Wherein lies a chink in the armor is opportunity.
It's so annoying when they don't expand the geofence, because then it doesn't let me take a picture of the damn product. So I had to take a picture of them saying that it was manually delivered. Okay, go ahead. Next one is right there. So this one's going to a cul-de-sac. It is 10170.
So I'm just going to stay live on here and just appeal to people and say, please, hey, like, share, subscribe. Let's have a conversation. Definitely light up the comments.
Got a whole horse statue in there. 38.
So as I continue to rant and rave, once again, we are out here delivering Amazon Flex. This is what we do for a living anyway. We actually deliver packages to the military bases, dry goods from a entity called AFES. If you're prior military, you lived on a military base, whatnot, went to the BX or PX, or you went to the commissary, you understand who we deliver to and who we deliver for the military and their families. That's what we've been doing since 2016. We did take a break during the pandemic because they actually cut back on using contractors. We've been contracting with them for forever. So once again, like, share, subscribe. You're supporting people who support the military. We've been doing it our whole lives regardless. I've been working via the military since I was like 17. as far as I did summer work with them, and then I've just worked with the military my whole life. I've never been in the military, but I've worked with the military. My son is currently serving in the Air Force, which is awesome, and proud of him. And so in and out. My dad was in 22 years. My brother-in-law, Command Sergeant Major, retired. I'm really hoping that we can spur up some unity. That's what we need. People need to start following people like us, entities like us. We need to start following you. We need to start having conversations. We need to stop all these politicians that are just all in it for themselves. They're bought and paid for, which we've always known. Even though when I was a kid, my parents talked about it. I heard adults talking about it when I was a kid, and here I am, 47 years old. It's kind of the same thing today. When's it going to stop, guys? We have to communicate with each other. We have to form our own alliances and deal in our own trade. Make sure you're shopping local. Make sure you're forming these little groups that help each other. Things of that nature. I think it's a house right there too.
Yeah, it is. Back up. This just goes to the driveway. We'll walk across the grass. Guys, it's aesthetics, but come on, safety. You guys gotta go for more fucking light out here.
So, yeah, we have to come together. We have to live for each other. Definitely need to stop the racism and all the religion separation things. We need to stop all that. Whatever you call it, prayer, or thoughts, karma, all that. It needs to be for each other. We need to stop worrying about people's color of skin or religion and race, and all that stuff is so weird to me. I mean, who doesn't love each other? Who doesn't want to die for one another? As far as just making sure that we're all taken care of. It's just amazing to me that someone can join, like the government, be a soldier, knowing that you're fighting, you're in it for the nation, and then then be racist or be, have some type of religious bias or something like that. It's kind of weird, should be one for all and all for one. So.
of just odd, because why would they not just bundle them together? Alright, bro, you don't want to go? Gotcha.
Interesting.
Are they still sitting there? Maybe they're delivering packages too. 1264. That one back there. This is their driveway.
Not gonna argue. Wouldn't do us any good. So, as I was saying, yeah, well, we're gonna walk through their grass. Like the last 5 houses, been like, oh, I don't want to walk through people's grass. So then I go to a part where she could walk around and go deliver their package. It's like, oh, yeah, I guess I'm gonna walk through their grass this time. Just wants to be a control freak. That's all it is, just controlling. Weird. Very weird to me. But it is what it is. It is what it is.
I think we have 2 houses next to each other again. Good morning. How are you? Hope you're doing well.
If you have any thoughts on the current tariffs, comment down below. 104%. Actually, more like triple that with the tariffs from 2017 enacted by Donald Trump.
I mean, how's that different from anybody else? That's their notation. Take your first right instead of waiting to go, because we gotta come back up that street. This is 10557. Looks like it's the second house on the right once we turn onto the street here. I guess that's our large tree. Okay. Great. Large trees, lady. Oh gosh.
I don't know how tariffs are affecting you, but we're out here doing Amazon Flex to be able to pay for our small business fuel fees and parts.
Too much to afford, really. Can't imagine. Good morning. How are you doing? Hope you're having a good morning. Thank you for watching us.
Like it, share it, subscribe it. Comment down below. What's your point of view on the tariffs and how they affect you?
They're going to affect us big time. Actually, they're already starting. So we, just to give you information, we actually own a trucking business. And I started doing Amazon Flex on the side because rates are really horrible right now. Even trying to run a local load, like a 15, 20-mile local load, at best is paying $200, but then you gotta pay for your diesel fuel. You gotta wait 8 hours, you know, sometimes longer depending on if you have to locate a trailer or you know, live unload or live load. So you could waste a whole day for $200. Or here, just doing a 3-hour run, I'm averaging about 140 a day right now. So, and I'm not spending fuel, and I'm not spending all day long. And thanks for watching. I'm telling you all this, and you're not even watching. Dang, bro.
Mm-hmm. We've had about 6 people now come in. And one person stayed for a minute as I was talking to them.
It's 38,
but no
48.
one's replying or trying to
Engage.
Communicate.
Maybe on the left-hand side, probably like 3 or 4 houses down. It's 38, 60. So 2 more houses. Big old mansion style house right here. With the extendo garage.
See if they have any loads available.
Kiana, you need to come clean your house. $800 for an hour.
Clean your house.
$800 an hour.
That's not has anything to do with the loads available. That dude just waved his hand at you like, what are you doing? Because you opened the door as the car going by.
Well, he can fucking drive around.
It's funny. My wife is at fault. So as a car's coming, my wife doesn't like kind of get out of the way and let the car come by. The only 2 vehicles on the road right now at 5 o'clock in the morning. She doesn't get out of the way and let the car sensibly come by. She just kind of just swings the door open and just does her thing. If that car actually had hit the door, it would actually pinch her between the door and the frame. So it's kind of looking out for yourself, right? Because you don't know if that person is in what kind of condition that person is. They could be distraught. They could be under drugs. You just don't know. And so why not err on the side of caution and kind of go ahead and let that car pass by. There's no traffic, so just let that one car pass by, and then you get your box and you go deliver. But my wife's thinking, hey, inshallah, right? It's that Arab shit. Inshallah. Not a thought process that I can prescribe to or subscribe to.
What do you mean?
We're in here for my conversation. It's fine.
$3,887. What's the next one? It's like the second house from the end on the right or left. Amazon's pretty much going to have the whole world as their slave pretty soon.
That's the goal. Sure, many people say that about our house.
I haven't been lucky enough yet to 3,887.
Because our packages come from Forney.
20.
Excuse me.
I hate it when I see cars on the street with lights because I feel like they're gonna like come after and steal the package. You know what I mean? So 3823 Royal Lane. This is right on this road, huh? Those are always the dangerous ones.
Bonjour.
Good morning.
Comment ça va? Ça va bien? Ça va très mal? Très très mal? Je suis fatigué.
Third house from the corner. There's no, it's got to be the inside road. There, you can't deliver. So yeah, it's telling me to stop up here. You got to go around the road. That is what? That's interesting.
Technology.
Right?
It's good until it's not.
And look, I've noticed quite a few roads that were, yeah, this road right here.
That's if you can see a road right there. Gay Donnell Willis, Dallas
So it's going to
City
be
Council.
the third house on the left.
District 13.
Can't see because this light is on.
What's the house number?
3823. And their damn signs are so small. That's it. We're gonna have to come back out and come back down here to that road we just passed there for the next stop. 3810. Package. Looks like it's to the left, the house on the cul-de-sac here. 3810. Right there. He must be doing Amazon packages too.
That's the same guy. He's like fucking shadowing us, basically.
Yeah, that's so weird. Something different mule box. This next one is 10940. You're about to pass it. Should have brought the 10-foot for any that. Or at least I'll get a 6-foot cord actually. I'm gonna take the first left. Okay, light drive.
I would say there's nothing wrong with you buying cords just for this car. We don't have to interchange cords in and out.
It's gonna be on the right hand side, the 4th house down. 20, 30, next one. Down. Right here. This guy. A little bit more. There. Walkways right there. Yeah.
That you can tell my wife has no grace about her. So like doing these type of things, just have to kind of just be quiet and drive.
Next one, we're gonna turn around and go back out. delivering to the same house. Wow. $10,919 on Aladdin Drive. So yeah, $10,919. It's the second house on the left once we turn the street.
Maybe they're just following us and picking it back.
No, he had a package in his hand. Second house on the left. I think this is it. Yeah. Shows us right there. Oh, you can get on their channel? Is that from YouTube? Yes, there. Okay. Here, Gallervanton. Once we turn on the road, it's the second house on the right.
They're in their kitchen. So they're in their kitchen.
%20 on Europe, 24% on China, 34% on China, 20%, 24% on Japan. The administration doubled on China. President now threatening an additional 50% import tax on the nation. The Treasury Secretary leaving the door open for everybody else, saying over 50 countries have responded. We look forward to meaningful negotiations with them. over the coming weeks. So the question hasn't changed. It remains the same. Is it a negotiation or is it a new rule for the game?
The fact that we are still asking that question, I cannot answer that question because nobody can answer that question. The fact that we are still having that question is really the reason why you saw a $2.5 trillion swing in the S&P 500 in the span of 15 minutes yesterday. What is the lesson from that? The lesson is don't take risk. Don't take risk in stocks and don't take risk in bonds because your face may get ripped off.
The pendulum swinging from one idea to the next, and in between you can do a lot of damage, and I think we've seen the damage done potentially for the economy in the months to come.
Absolutely, and the pendulum has been swinging. One thing I take of note, though, is yesterday the Treasury Secretary coming out on a network, on Fox News, but also on Twitter, talking about the fact that he is going to be leading negotiations, starting with Japan. And that makes you think, potentially, this is the start of negotiations for a number of trading partners, except for one, China. Overnight, China with some tough words when it comes to the United States, saying that the U.S. threat to escalate tariffs on China is a mistake on top of a mistake, and they will, Jonathan, fight to the end.
Vietnam offered to drop tariffs, rejected. The EU's come out and offered to drop tariffs on industrial goods, rejected. Is it clear what these countries need to provide to this administration?
In a word, no. And I think pretty much everyone across the board doesn't have a clear understanding, and part of that is because there are competing ideals in the White House about what the goal actually is. You have some people talking about the trade deficit, getting it down to zero. You have other people saying, actually, it's just about getting a better deal for the United States to increase production here. In the meantime, markets are reeling, and it's hard to know when stability is going to come back into play.
Equity's doing better so far this morning, at least. Good morning to you all just tuning in. Over the next 60 minutes, we'll catch up with Peter Oppenheimer of Goldman Sachs after a wild 24 hours in markets. John Lieber of Eurasia Group as President Trump plays tariff hardball, and Skylar Montgomery-Koenig of Barclays and why investors are in max bearish dollar territory. We begin this hour with stocks pushing higher, looking to snap a three-day losing streak as countries rush to the negotiating table. Peter Oppenheimer of Goldman Sachs writing, we would argue that we are in an event-driven bear market triggered by tariffs. However, it could easily morph into a cyclical bear market given growing recession risk. Peter joins us now for more. Peter, welcome to the program, sir. It's good to see you. What's the difference between the two? Why is that distinction so important this morning?
Well, actually, the distinction is not that much when you look at the typical falls that you tend to get. In both cases, the falls on average in equities are roughly about 30%. There's a reasonable distribution around that, that's the average. But mainly, they're distinguished by how long it takes for the market to fall and then recover. And in what we call event-driven bear markets, that process is a lot faster. What's the difference between the two? Well, event-driven bear markets, as we call them, are something that's sort of triggered by an exogenous shock, an event like tariffs, really just forces the economy off its previous track. Whereas a cyclical one, the most common type of bear market we see in equities, is really about recessions.
We hope, the way we've been framing is kind of the peak tariff rate, because we do hope that we end up in negotiations, they start to come down. We were at a peak tariff rate of kind of 25 to 30% range before this 50% announcement. This takes you close to 30%, especially if we get some of those sectoral tariffs, which we do expect on things like pharmaceuticals. I do hope after that we move into a period of negotiations. And as we're saying, with China, it's pretty tense, and maybe that could take a lot longer. Who knows where that could go? But hopefully with some of the other countries, we start to get negotiations. However, the administration is talking tough. They're saying they're looking for great deals. And that says to me that it could be months until these come off rather than days.
Rob, we're going to hear that word repeatedly.
So juvenile.
And to your point, this could go on for months. That word hope right now is the problem. Not to be too dark. Hope is the problem, and I'll tell you why. For as long as we're here and say, are these the rules of the game? Or can we negotiate? Companies will do nothing. In fact, they'll do less. They won't be building the factory, because if they don't believe the tariffs are actually going to hold, why would they start making plans to build the factory and boost capacity in the United States?
Right.
Lisa, that's the issue you've got in the near to medium term at the moment, and that speaks to Delta Airlines again this morning. What is Delta doing? They're reducing capacity. Now, I know that's a very unique story for the airline business, but you're going to see other businesses do the same. The opposite of what the administration would like to see, because we're stuck in the hope game. We're sitting here every single morning saying, are these the rules of the game? Or you negotiate. If you don't believe they're the rules of the game, if you keep sitting here and saying, I hope they will come off, if they stay on, you're not going to come come out with big plans for CapEx anytime soon.
Factories are being idled. People actually on the margins have been laid off from factories that are on pause until people have greater sense of certainty. What we've seen, to your point, is exactly the opposite. And inaction is action. And what we're seeing is companies not deciding to do CapEx pretty much across the board. They're not deciding to purchase other companies. So at what point does this become a self-fulfilling prophecy?
Robert's stuck in a city. Robert's going to see you, sir. Pleasure. Thank you very much.
the
This
third
came from the
house on
central
the
bank
left
governor of
once we turn on the room.
Spain just months ago in the Financial Times. Some of the worst case scenarios that we had identified are materializing. That's the situation we're in right now. Equity futures on the S&P 500 down by about 0.7%. Wild swings over the past few days. Let's give an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Just to recap those Delta earnings with shares in the pre-market up nearly 3%. It withdrew its full-year financial guidance, citing uncertainty surrounding global trade. Delta also said it will update the outlook later in the year as visibility improves. CEO Ed Bastian told Bloomberg that confidence is dimming, growth is stalling, and revenue has flatlined.
I think I said third house on the
President
right,
Trump
didn't I?
signaled measures to promote the use of coal in the U.S., aiming to revive the fossil fuel industry and power data centers. The initiatives include legal strikes against state regulations and efforts to accelerate coal exports and develop coal technologies.
Right here.
Elsewhere in Germany, conservatives and social democrats have reached an agreement to form a ruling coalition that paves the way for Friedrich Merz to become chancellor. A deal is set to be announced later today, but it still must be approved by members of the social democrats. Merz will likely succeed Olaf Scholz as chancellor in the first week of May.
You can go back out that way instead of looping all the way around. Good morning.
The incidence of cancer, which is to say people getting it, is higher than it was 20 or 30 or 40 years ago. Is that because detection is better than it used to be?
All right, so the dirty secret is we have no idea. We don't collect data well in the United States. What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people are getting more cancers. That's real. We have no idea why, but we are seeing younger people, more colon cancer, more breast cancer, and other cancers in younger individuals, 20, 30, 40-year-olds, that we never used to see.
What do you think could possibly be the cause? I assume pollution or the environment in some ways?
We assume it's either
It's like the
something in
seventh house on the
environment,
right.
we assume it's diet,
down here.
it's ultra-processed foods, it's microplastics,
4230.
it's changes in the microbiome. We really don't know.
3, 4,
Listen carefully.
6.
Can you hear the rhythm in the markets?
7? Yep, right.
Not just the syncopations triggered by inflation.
You could turn around also because you're going to go right back up there.
The dissonance that moves the decay. And the
is on the heartbeat of the tech sector.
Spread across global markets.
Real-time data aspect is going to be.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the
Close on the S&P 500 south of 5K just yesterday for the first time going back to April of last year. This morning, futures are touch softer, down 0.25%. Is this the playbook for earnings season? Pull your guidance. That's exactly what Delta Airlines did about 20 minutes ago. That stock leads to higher by 3% in the pre-market.
They actually performed better than expected on the margins the first quarter, and this actually does speak to their ability to be the front runner from all airlines. The fact that they're going to be cutting capacity highlights maybe their ability to keep prices high and even increase them further at a time when all of the industry is going to be feeling the same pressure.
More earnings coming through the week. You'll get the big banks on Friday, starting with JP Morgan and a whole lot more. Under surveillance this morning, dollar assets in question.
Because they have these great worries over U.S. policy, they have brought into question the role of the U.S. and it's brought into question the role of the dollar in the global system. In this market narrative around a broad reallocation away from U.S. assets, and that in turn putting pressure on the dollar. This is also not the first time that the market has falsely gotten excited about this narrative and it wasn't sustainable. Even if it is the start of a massive rotation, that's something that will take a decade or more to play out.
So here's the latest this morning. The US dollar pulling back as President Trump's so-called reciprocal tariffs take effect. China holding fire on immediate retaliation. Alexander Chekhov of BNP Paribas writing, the market is trading rotation out of US assets, making universal tariffs potentially bearish for the US
Second
dollar.
house
Alexander joins us
from
now
the
for more.
end
Alex,
on
good
the
morning.
right.
It's good to see you. Good morning. Let's
Once
start on that
we
call. Things have
merge
changed.
over onto
We
that.
started the year and a lot of people thought tariffs up, dollar stronger. Tariffs up, dollar weaker. What has changed?
Exactly as you say, a lot has changed. The market's gone from trading tariffs as dollar bullish because FX was the offsetting factor for tariffs to now treating them as dollar bearish because the market's focused on a rotation out of US assets. I think what's changed is previously the market was looking at unilateral tariffs. Now the market is facing universal tariffs, and universal tariffs are more growth negative for the US. What's key for FX is that foreign investors are particularly overweight US equities because of the valuation adjustment that we've had in the last 10 years or so. And that makes FX more sensitive to this rotation.
That dollar long has accumulated over the best part of a decade plus. Do you see a real structural shift emerging here?
Yes, we do. So part of that, of course, is the tariff narrative, but part of that is also about Eurozone fiscal reform. We think Eurodollar can get to 120 by the end of next year on the basis that Eurozone fiscal reform is a game changer. It means structurally higher bond yields. It means structurally higher growth. And for FX, it also means that the higher supply can crowd in European investors. In other words, less of an outflow. So it's not just about the equity rotation that we just spoke about. It's also about a crowding into domestic fixed income markets.
Is the rumor a bit more inflated than maybe the reality, though? I mean, if we're talking about increasing defense spending in Europe, how much is that actually going to boost growth in a way beyond what we've already seen?
Yeah, so before these tariffs were enacted, we were looking for about a 0.4% change or so to growth this year. So not immaterial, and a lot of that comes from the confidence channel. Later, as Germany sort of potentially builds out its defense industry, there are other channels. We do think it's game-changing over the medium term, but it's a sort of sequence. In the near term, if tariffs are here to stay, then that offsets some of the fiscal impact. But in the coming years, and I think that's ultimately what the FX market's going to be looking at, it's a bullish factor for the euro.
What has changed since late last year, when everyone said that tariffs unabashedly would be worse for the rest of the world than the United States, that suddenly that entire narrative has gotten completely flipped on its head?
I think it's the universal tariffs. Universal tariffs are more growth negative for the US. I think the paradigm that we're in for Eurodollar specifically is not too dissimilar to the one we're in 2017. When Eurodollar rallied from 105 to 125, in spite of front-end rates moving 100 basis points against the pair. This time we could see something similar if the Fed, for example, keep rates on hold, as we expect them to in the near term, given the focus on inflation, where FX then rather than focusing on rates, starts to focus on global asset reallocation.
What's the safe haven now? I see the Swiss franc money pouring into that currency this morning, but they're being hit with a 31% tariff, even higher than the European Union.
Yeah.
And Trump last night is talking about hitting pharmaceuticals, which is a main industry that they export.
I think you can make a bearish case for the Swiss franc still. You can say, for example, the SNB are a dovish central bank. And as you rightly point out, tariffs on Switzerland are not immaterial either. But the way in which we think about it is when you have a big risk off, it's very hard to fight the inflow into Swiss. So it is still a safe haven. It might not be the best safe haven. So for example, yen, we ultimately expect to perform better than Swiss over the medium term. But I think in a big risk off, those factors like what are the tariffs on Switzerland or what is the SNB doing sort of move to the background for the market.
You're focused on the European story. Can we just throw some China in there just briefly to finish the conversation? Do you see a potential for this to morph into a currency war from a trade war? Or are these tariffs just so large, so big, that any kind of devaluation on the side is just kind of doing things around the edges?
I think that it'll be very difficult for the FX to offset the extent to which these tariffs have been enacted, or the extent to which, or how large these tariffs are. Ultimately, we have a more bearish view on Asia FX because that's where the real surprise came last week. Right? People were, or I would say, investors were likely already expecting
And then we're
tariffs
going
on Europe,
the opposite way down this
definitely
road.
not to the extent that we've seen them on Asia FX. And so we think the euro can do well not just versus the dollar, but also versus the Asian FX complex, and CNH is part of that. So euro CNH, although it is already at very high levels, we think risks are still to the top side.
Surprising to see such large numbers on places like Vietnam. And I'm sure a lot of US-based companies were very upset to see that just last week.
Yeah, which raises the question of when do they push back, and are we going to hear that in guidance? I would take that a step further. If universal tariffs hurt the U.S. more than the rest of the world, at what point do potential deals offset that? Or is this sort of cat out of the bag, and we can't really put it back in, genie out of the bottle, whatever kind of analogy you want to put? Thank you, that's perfect. And it's hard to really reset this clock.
Can I mention another French bank? Forgive me, SocGen came out with this morning. Very competitive, the two. Slapping 104% tariffs essentially means China's exports to the US will largely be wiped out. The scale of tariffs is simply too large for any exporters or consumers to swallow. The FX channel is not going to change their story with 104% tariffs on.
This is ultimately going to be a story of either negotiation or a cessation of trade, or potentially consumers paying a lot more, and that's basically where we're at.
Alex, good to see you, sir. Thanks for dropping by. I appreciate it. Alexander Jekoff there of BNP Paribas. Up next on the program, Chris Harvey of Wells Fargo, Bloomberg's Tyler Kendall, Sheila Kaolu of Jefferies, and Tony Rodriguez of Nuveen. From New York City this morning, good morning to you all. The second hour of Bloomberg surveillance. Up next.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Joe Wong is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
That's going to take us all the way around.
Digital robotic capabilities where it's not just the robot doing a surgical procedure, it's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something
Instead of
that
going out to the
position us
highway,
extremely
take a
well as we
left
talk
on
about
that Crowley.
not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
4330.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000
second house on the left once you turn on the
100 bureaus across the globe.
And then we're gonna back out, come back out this way and go to the next street over.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have to take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything.
You were in wait-and-see mode. Those are the three most dangerous words.
We thought that last week would be the week of peak uncertainty. It was not. We could be in for a long period of pain here.
The critical thing is to what extent investors really start to fully price a recession.
What ends a market cycle is an oncoming recession, an uncooperative Fed, or bond yields moving higher.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. On the S&P 500, futures are lower. We're down across the board. Wild swings over the past few days, and they continue. Gapping lower by 1.2% on the S&P 500. On the Nasdaq, we're down by 0.9. The focus now shifts to corporate America. Delta Airlines out just 30 minutes ago. In a few days' time, we'll hear from the big banks. Delta's up by more than 3%, and Delta doing what I imagine many others will do. Pulling guidance, Lisa, this morning.
They're pulling guidance at a time where they basically say, how can we have any certainty whatsoever? They say they're watching closely their premium content, as you were mentioning before, John, because that has been fueling a lot of their gains. But they do plan on trimming capital expenditures. This is important. They also are expecting no growth in flying capacity for the second half of this year. So it's not just no action. They are battening down the hatches, and they are preparing for potentially a bout of volatility.
We're expecting more still to come on this front. Companies in corporate America, but just crossing the Bloomberg terminal, Walmart's a very different beast. Walmart this morning, Lisa, reaffirming their guidance for the months ahead.
And they're going to have a much different story to tell when it comes to how they're negotiating the pass-throughs and how much they can pass along to the consumer. Nonetheless, they said that full year 2026 guidance remains unchanged, with first quarter sales up 3% to 4%. So not necessarily the same kind of flavor as we're hearing from Delta. Interesting to see that Levi's said the same thing. So at what point will the guidance that we're getting from corporate America be a lot more positive than some of the gloom and the doom of the projections of economists on Wall Street? This is the contradiction, the past and the present versus the potential projection of the future.
This pendulum keeps swinging between deal hopes and tariff threats, and that continues this morning, depending on who you speak to. Your day ahead looks like this. A couple of things to watch for. Busy morning coming up. You'll hear from Secretary Bessent a little bit later on this morning, 8:30 Eastern Time. After that, he'll be very focused on this number, $39 billion a 10-year note coming to market at a time when 10-year bond yields are higher, not lower. We're up 8 basis points at the moment to 437. Someone else speaks a little bit later as well, Anne-Marie. Jamieson Greer on Capitol Hill, day 2 for the U.S. Trade Representative.
This is going to be very very important. He spoke yesterday at the Senate, and that's when you saw Republicans come out, notably Senator Tom Tillis. Whose throat do I choke if this proves to be wrong? Republicans are starting to get nervous. What you heard from Ambassador Greer is that the middle class has been decimated when it comes to the so-called China shock, and they are excited about this being one of the biggest trade actions we have seen since China joined the WTO. But you have to imagine, given the market reaction this morning, and that 104% went on China, and remind you, it's even more for goods that are hit with 301 from Trump 1.0, north of 120%. ARP is going to get a lot of questions.
I mentioned equities were gapping lower. We're down by 1.7% on the S&P 500. There is a why. So let's get to that why. This headline just crossed in the Bloomberg terminal that China is raising tariffs on U.S. goods to 84%.
Woo! 84%.
We sit here this morning waiting for retaliation.
Everything you liked about China, all those products about to disappear.
So this raises the pressure that much more. Initially, there were reports that maybe the reaction was much more muted from China. They were taking a wait-and-see approach after having more than 104% tariffs on all their goods coming into the U.S. as of today. A real question here, how does President Trump respond? How much does this affect the current products that are sitting on the ocean waiting to get to the United States? And frankly, what does this relationship look like at a time where you already have seen a huge drop in the amount of trade between these two countries?
I think you're in the market right now. You're wondering where to hide.
84% retaliatory tariffs.
By double digits across the long end of the curve.
A lot of stuff is not going to be on the shelves, guys. This stuff is not even off the boat yet. They're not going to get off the boat.
Lisa, that auction later, let's sit on that. 10-year auction, supply coming later at 1 p.m. Eastern time. You always make a big deal of it. I do. How much?
Oh, man.
I know is an easy one. Today we have $39 billion of 10-year.
If you're just joining us, welcome to the program. So your main headline this morning, as expected, the reciprocal tariffs go on. Just moments ago, getting confirmation from the Chinese side of things that China's raising tariffs on U.S. goods to 84%. Equities gapping lower stateside, even more lower. Much, much lower across Europe. The DAX, across France, across Italy. We're seeing losses across the continent. Coming up this hour, we'll catch up with Chris Harvey of Wells Fargo following another volatile trading day. Sheila Kahyaoglu of Jefferies reacting to Delta earnings. And Tony Rodriguez of Nuveen as the bond market offers very little comfort. We begin this hour with stocks looking to snap a 4-day losing streak and struggling as another round of Trump tariffs kick in. Chris Harvey of Wells Fargo writing there's growing crisis of confidence brewing. Stock market vigilantes will not be that patient or ignored. It probably needs to get worse before it gets better. Chris joins us now for more. Chris, good morning, good to see you.
Good to see you too.
This is a really difficult one, so let's take a beat. Typically we sit here and think about the kind of threshold that it would take for a policymaker to step in and act as the circuit breaker. This time the policymaker is the source of the risk, maybe not the solution. How different is this as a moment for you and the team?
It's very different. And the issue is we go back to Greenspan before the 04 tightening cycle. We said we can raise rates, right? But what we need to do is we need to communicate that to you. We need to tell you how we're going to raise rates, what time period, so you can plan. If you're going to buy a house, you can speed up that house purchase. You're going to buy a car, you can speed that up. This administration is talking a lot, but they're not communicating a lot. This weekend, we had one person saying tariffs are negotiable, and somebody else saying they're non-negotiable. What are they? What's your goal? What you're trying to do? What are we?
They're trying to confuse you.
What time period? You need to communicate better. The other thing is the market is sending a big signal. It's not a good idea to ignore that.
China's sending a big signal right now as well, so I'd love your thoughts on that too.
Over here on the
big
right.
tariffs coming from the US side overnight. China responding with 84%.
Right,
I think at the moment for a lot of investors, they look at that headline and say, you know what, given how little we sell to China, that's not much of a big deal. But I think the bigger read across, the bigger read through at the moment, that makes it much, much harder to get to the negotiating table with this president who's pushed back against China threatening to do exactly this.
Yeah, so what people have realized is the weak spot for the U.S. is the capital markets and the economy. If they push back, right, we're going to lose, and we are losing some negotiating leverage. What are we talking about? We're talking about recession. We're talking about job losses. We're talking about the negative wealth effect. We're talking in a recession, the deficit goes wider, not tighter, and people know that. So they're saying, okay, fine. If we're going to do this, we're just going to pull everyone down into the muck. And what you're seeing is just not great.
Well, I'm looking right now. China also added 6 more firms from the U.S. to the unreliable list at the same time that we've seen incredible losses in the likes of Apple, which seems to be very much in the crosshairs of this. How much does this discourage you from going to the multinational companies, actually at a time when they potentially could be the most exposed?
Yeah, Lisa, what we need to do is we need to figure out exactly what we're dealing with. And because it's a moving target, that's why it's so hard that's why the markets are so fluid at this point in time. And you're right, where are the safe havens? The safe havens are at the front end of the curve. Safe havens are in
meme stocks. You better be invested in meme stocks. That's a safe haven.
That's a place where
AMC.
but it still have showing some stress.
45.35.
Once AMC gets up to about
Find a safe haven. It's very
45, 50,000 a share, then you drop it out the bottom.
Yeah, the reason why
You got to hold until
through 440, you're looking at 30-year yields now almost 4.9%.
over about 25,000 a share.
They've absolutely been surging. What's going on? I mean, what are you doing with this?
So there's lots of talk. One conversation is that out of Asia that they're selling duration, right? So they're selling longer bonds and buying shorter bonds for liquidity issues to send a message. There's other talk about basis trades. There's if you look at what's happening, nominals. Last time I looked, nominals are going higher, but it's being forced by reals. It's not being forced by, at least in the last couple of days, by inflation expectation. That seems more like a liquidity issue, people moving around positions, not so much fundamental driven, right? The other thing is obviously we've got issues coming
back into that.
and there's more and more fear, even though right now inflation expectations or break-evens aren't moving. There's fear that that will continue in the future.
Seeing some big moves right now, that's for sure. If you are just joining us, welcome to the program. 84% tariffs from China. China raising tariffs on US goods to 84%, and the spillover immediate. Equity futures down by 1.6% on the S&P 500. The Russell down by 2.5. The DAX is down by 4 full percentage points. And in the commodity market, you're seeing crude roll over as well. On WTI and on Brent, we're down by 6%. Brent crude 58.98. WTI 55.85. There will be some individuals in America making a lot of noise today off the back of this headline. I'm thinking of the farmers in a few red states.
Absolutely, because remember Trump 1.0, the farmers were the ones that got hit the worst because they didn't have the export market of China to go to, and then the United States had to bail them out. But Jonathan, you started this conversation this morning when you're looking to policy makers for the answers, for the solutions. When I asked the president directly the pain threshold he was willing to take on for the market, he said sometimes you have to take medicine to fix something. They think the tariffs are the medicine. Well, what's going to be the solution and the medicine to what is happening right now, the fallout from these tariffs?
Some big moves elsewhere as well. Apple's had a difficult run of things. That name is down by 2% in the pre-market at the moment. Apple is down before today by more than 20% in just 4 sessions. The worst run for that name going back to 2000. The year 2000, the worst 4-day run in 25 years for one of the biggest companies on the planet. Chris Harvey, not to talk about single names exclusively, but we can talk about Mag 7.
Right.
Are they in a difficult moment now in a much, much bigger way than maybe we've ever seen for those names?
So some, yes, and obviously Apple is more of a focus because of the tariffs and what they manufacture in China, right? The rest of the Mag 7, more of the communication names, they're in a little bit better space, but it's not as if anyone's in great space. It's not as if you can say, wow, this is a perfect spot. This is fantastic for these guys. Couldn't be any better. It's just relative. Who's worse, who's better, and who's going to get hurt a little bit more. Where's the defensiveness? Right now, what we're doing is everything is across a risk spectrum, and which one has less risk. That's all you're doing.
What's on your dashboard at the moment to establish where a tradable bottom might be? Is that impossible right now for you and the team?
No. So John, this is what we're looking at, because we see a setup. We don't see the bottom, but we see a setup, right? We want to see 1Q numbers reset. We want to see them cut. We want to see an inversion in the front end of the curve between 2 years and Fed funds of 100 basis points or more. That tells us that the market's indicating we need to move faster, you need to hurry up, and potential monetary policies coming. In addition to that, we want to hear the conversation become more productive. We want it either to shift from tariffs to taxes, or the acknowledgement that, oh yes, it's good. Everyone knows there's going to be pain, but the issue is they just don't know that the cure seems to be worse than the disease right now. But that's what the market's saying. You have to acknowledge that, hey, yes, there's going to be pain, but there's light at the end of the tunnel. Here's what we're doing. Here's our goals. When we get there, this is what's going to happen.
In the meantime, Delta withdrew its guidance for the full year. Walmart reaffirmed its guidance. What do you do with this?
So we actually had this conversation yesterday, and I've been having this conversation a lot. We expect numbers to come down.
112.
It's going to range. Some people, we were talking to our auto analyst, and he would not be surprised if there would be suspension of guidance there. We were talking to others saying, maybe it's going to be 5%, maybe 10%. What we're going to hear is the C-suite's going to say, out of an abundance of caution, here's what we're doing. We're lowering the top end of guidance. We're cutting 5%. We're cutting 10% because of the uncertainty. We have to remove guidance. So it's going to be right across the board. And you're right. The example of Walmart and Delta is a good one because you have the two ends of the spectrum.
It sounds like going to stick with us some place to say. What a morning already. Chris Harvey of Wells Fargo there. If you are just joining us, some big moves out of China, not just the United States. For an update on that and more, let's get your Bloomberg brief with Danny Berger. Hey, Danny.
John, let's get straight to the breaking news. China is raising tariffs on goods imported from the U.S. to 84%. It's a retaliation against a new 104% levy the president... A government statement. Now, the shares of large U.S. and European drug makers are sliding after President Donald Trump said the U.S. was planning to announce a major tariff on pharmaceuticals soon. Speaking to an event at the National Republican Congressional Committee, Trump said the tariffs will incentivize drug companies to move their operations to the U.S. Elsewhere, San Francisco Fed President Mary Daly says that the central bank can take its time before adjusting interest rates. Daly saying, quote, with good growth and policy in a good place, we built the time and the ability just to tread slowly and tread carefully. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. Big moves from China. Big moves in this equity market, down 1.4% on the S&P.
You hear that?
Up next.
Trying to impose 84% tariffs on oil.
I'm assuming this all got gamed out because it's a novel approach. It needed to be thought out. Whose throat do I get to choke if this proves to be wrong?
Tyler Kendall, we'll answer that one next.
This is the dumb thing is like...
Good morning.
Chinese products are still cheaper, and American products are more expensive anyways, you know what I'm saying? Our labor costs are higher, so I don't see many people buying American-made products in other countries because there's so many choices that's so much cheaper and better quality. You know what I mean? But we'll see how it works out. Everybody's about to...
It's about to go down.
Second house on the right as we turn down this road, and then there's a package delivery across the street. So 4329.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and
what we saw in the markets and some of the pushback, I'm assuming this all got gamed out because it's a novel approach. It needed to be thought out. Whose throat do I get to choke if this proves to be wrong?
Here's the latest this morning. President Trump's tariff rollout raising concerns for Republican lawmakers on Capitol Hill. Senator Ted Cruz also warning there could be a bloodbath in the midterms if tariffs push the economy into a recession. Bloomberg's Tyler Kendall joins us now for more. Tyler, welcome back. Is the pressure starting to build?
Yeah, hey, John, it certainly does appear that some Republicans are starting to sound the alarm that these tariffs are a little bit more than they bargained for, although we are still seeing them kind of walk the line between criticizing the tariff policy itself versus the tariff rollout plan. And we should just note, for quick context, as you well know, many of these congressional Republicans won the majorities in Congress by campaigning on that economic messaging. And some Republicans in some tight re-election races in 2026, like Senator Tillis, might feel like they don't have the benefit of an extra couple of years to see some of the potential policy benefits from these tariff plans. And as you mentioned earlier this hour, it's not necessarily new concerns from Republicans, particularly when it comes to potential impacts to farmers. And I went back and I checked my notes this morning because I caught up with Senator Todd Young, a Republican from Indiana, after he questioned Treasury Secretary Scott Bessent during his confirmation hearing about how this White House would protect farmers. And at the time, he told me that he had assurances from this administration that tariffs would be targeted, except in some cases where they would be used as a negotiating tool. It is so clear, John, that we have blown past those expectations, not just of the market, but of these lawmakers who came out and had supported the tariff plans to begin with.
Tyler, today the big focus is going to be on China, I imagine, when Jamieson Greer sits down on the House side at 10 a.m. Yesterday, Trump claimed that China wants to make a deal, and he's waiting for Beijing's call. Any inference you're getting from the White House that she plans to call Donald Trump?
Well, at this point, Anne-Marie, we also have to note that there hasn't been a call between these leaders since President Trump was inaugurated. And we went from President Trump a couple of weeks ago saying that there could potentially be an in-person meeting between the two leaders. We saw Senator Steve Daines, another Republican who was questioning the USTR yesterday,
second house from an alleyway or
to try to make that potential meeting happen. And now we're, of course, at this broader escalation. And, of course, this goes back to our conversation about how farmers could potentially be targeted here. Of course, as you'll recall, the U.S. ag industry lost about $26 billion between 2018 and 2019 during the first trade war with China. But then I'd also point our attention to some of these other targeted actions that Beijing is taking, including when it comes to increasing export controls on critical minerals. That's going to be another pressure point for this White House, as well as the future of the TikTok deal. There's a lot of different facets to this conversation.
Hey, Tyler, great work as always. Tyler Kendall there. Out of the nation's capital, with us around the table, Chris Harvey of Wells Fargo still. Chris, this is where we really started the conversation. Where does the circuit breaker come from? Could it come from Capitol Hill?
It has to come from Capitol Hill. You have to hear the administration acknowledge what's going on, and you have to have them acknowledge and communicate that they see it, they understand it, and you have to have them start to slow things down. This conversation about
this is what they want, so you're not going to hear them say anything.
More stops left.
Congress that could be the ones to put a stop to this. You don't see maybe Xi Jinping or Donald Trump himself blinking.
I don't see in the conversation. So
y'all should put anti-turbo on there because I ain't blinked yet either.
Right, the situation between China and U.S. appears to think that China is the existential threat. We can have that continue, and likely that does continue.
This is really going to affect a lot of the military that shop on post, because all of their products are from other countries. I don't think I've seen very many that are from America at all. Second house on the right once we turn.
Can we strike deals? Can we move forward? Can we make progress? If we're showing progress, the markets will react positively. If we do not show progress,
99.36.
the markets are not going to react positively.
There's a story in the Financial
Yeah,
Times
look
about
at
how
the
U.S.
Amazon
ports are getting
boxes.
really crowded, that a lot of companies are delaying
There was
their
a
car shipments,
apartment I
and
delivered
they're
to
just
yesterday in
holding them at the
Hillsboro.
ports,
He had
hoping
at least
that maybe
15 packages sitting on his
these tariffs will
doorstep.
be removed. Maybe it'll take 4 days, maybe it'll take 5 days, and they're about to reach capacity at these ports. What will it take for both companies and for the markets to realize this is real?
Listen, it's real, right? So the complexity of this, you cannot turn around in a couple days, in a couple weeks, because you've basically tariffed or taxed almost every single country out there. In order to unwind that, it's no small feat. The other thing is, governments do not move quickly, right? And because of what we've done, people want to protect themselves. So they're going to have to talk to their lawyers, to their leaders, to their parliaments or whoever before they take some action. We can have the conversation, but the actual action and execution is going to take I think, a long period of time.
What are we seeing in markets? Is this just the fear that this is going to have a suppression to growth, or are we getting actually a sense of what markets are repricing as the new normal?
Yeah, the markets don't really know the end goal, right? Is it negotiation? Is it revenue generation? Or is it something much bigger, right? Do we want to change the way we do trade throughout the world for the rest of time? That's a big question.
Yeah, he
So the
does.
markets are just trying to figure out what's
Obviously he
going on.
does. Trump wants to change the way we trade because he wants his name to be on everything.
Right.
So what we have to do first, take out everybody else. Capitalism, right?
To engineer that supply for
It's capitalism.
response, you've got to believe that these are the rules of the game.
Root out all your competitors, take over,
Is this a negotiation
put
or
the Trump name on it like he puts on all the buildings.
I love how Chris puts it.
That's what he
Market is
wants.
crying to the White House. We want better communication. Can we have a therapist come in here and try to clarify what the end goal is?
What were you waiting for just
They're
now?
talking about the end goal. Like, it's so weird that they act like they have no clue.
It sounds like a lot of people are
All
He
these
said,
analysts and commentators.
I love recessions. I get to buy more.
I think that's what we're doing on every single market.
Got to find some light humor
This
in a
is
moment
only
like
to
this
line
one. We're
his
down
pocket.
again by 1.4% on the S&P. A special thanks to Chris Harvey of Wells Fargo. If you're just tuning in, welcome to the program.
Oh yeah, all the oligarchs.
25 minutes ago, we got
China's
China's
response
response
just
to the
them either.
overnight tariffs from the US side. 84% on US goods. That's driving equities lower, not just stateside, but in Europe too. And in the bond market, bond yields are higher, not lower. Again this morning, I know they got the attention of many of you yesterday. Is where we're focused again this morning. Why we see that haven bid into treasuries? Yields higher by 8 basis points. The 10-year 437.42. Earlier on this morning, Delta Airlines coming out and pulling guidance. Up next, we'll catch up with Sheila Kaolu of Jefferies from New York City. This is Bloomberg.
It's 4119. So we keep going straight, and then we turn on the next road. Left-ish.
Turn here.
Yeah. It's the only way to turn, baby.
Yeah, I don't know why you're telling me to turn there. That's why I thought I'd go ahead and join the fun.
4119.
Looks like this is a roundabout here.
Dang, bunny is everywhere. This number. Oh, there it is.
That's what it says on the screen. All right. European index update down 3%, 3.4%. The CAC 40, FTSE 100, DAX down 3.43. I mean, we're talking about trillions and trillions and trillions of dollars down. Market value, everybody is about to be on discount. So you have them telling you to go ahead and hold cash. Yeah, go ahead and hold cash, but go ahead and make some puts and generate some of that revenue that you make off your puts, boom, into some of these discounts, because these companies and these indexes aren't going anywhere. They may be on discount, but that's it. S&P 500 at 498. I don't believe so. I think it was like 488 unless it popped back up. Excuse me. Bonjour, bonjour. Ça va?
Good morning. How are you doing? Hope you have a great day, whatever you're going to be doing today.
We're working, delivering packages to you as you just leave us outside the skate or inside the skate?
Outside. Yeah, that's a dead end. Go down the road and then we'll go through the stoplight. It's like the second street and then third house on the right once we turn on that street.
Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francie Lacqua, and this is The Pulse, every weekday.
And we'll be finishing 4 to 5 minutes early. What happened?
Early on Bloomberg.
Has
the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Bringing you up to the minute tech news whenever and wherever it happens. I'm in Ludlow in Las Vegas, and this is Bloomberg.
Listen carefully. Can you hear the rhythm?
Not this next street, but the street after.
Not just the syncopations triggered by inflation, but in a prelude leading to global elections, the dissonance that moves the decay, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll
9-9, third house on the right. So that's the first house. Second house.
Live from New York City, welcome back. Equity futures sliding here by 1.2% on the S&P 500. On the Nasdaq, lower as well. 0.9% on the Russell. We're down by 1.8%. 30 minutes ago, we learned China's response to America's tariffs. China raising the tariffs on US goods to 84%. With 2 hours until the cash open, let's get to your morning movers. We can do that this morning with Danny Berger. Hey, Danny.
Hey, John, look, it's been a volatile morning for the benchmark, but one thing has been consistent, and that is the pain in pharmaceutical stocks this morning.
I mean, Pfizer's $21 a share now. Hey, everybody jump on in. Pfizer's not going nowhere. The water is warm. Not financial advice. Obviously, I'm nobody. But I'll be jumping in.